Hi, I'm Drew Russell, and I am coming to you here with the third quarter Russell recap on what happened in the Sarasota real estate market for the last 3 months. Up until about a week ago, I would have told you that the big story was the big change in mortgage rates that we've seen change dramatically over the past couple of months. But obviously, the big headline now is Hurricane Ian. And just in my travels talking to different folks, everyone in this area was impacted somehow, whether you had small yard damage or roof leaks or fences down in Sarasota, to people that live further south that we know that are experiencing just a complete and unthinkable tragedy. It has been a very traumatic time for everybody in some ways here. So that has been the big story. That obviously shut our market down for the latter part of the, most of last week. We're starting to see some closings come back online. Most of our area, at least downtown, is back and functional. So how that plays out in the fourth quarter is going to be a big storyline. And then obviously mortgage rates. If we look at this chart of mortgage rates, rates have gone up for 6 straight weeks. And if you think about it, in January, March, where our market kind of peaked, I would argue, rates were hovering around 3.5%. Now they're almost double that at 6.7%. And that is a huge story because it really goes to affecting the affordability of a house for the average American or the average home buyer that's going to be getting a 30-year mortgage. And that is coming up in some of our numbers that are coming out now. And so jumping into our September 2022 numbers, let's take a look back at what happened. Check out this graph where you will see a distinct drop in the number of sales historically. This is a 10-year graph. And with 945 closed sales in September of 2022, this is the lowest month on record in our MLS, dating all the way back to November of 2014. Now, we have to put an asterisk on this number because we know that we missed probably, I'm going to say, 3 to 4 business days of potential closings. And we usually have a lot of closings at the end of a month. So that could have been closer to 1,000 or a little more, but we're still decelerating in this market. We're seeing the numbers come down. The other major indicator that we like to look at for how the market is doing is what's going on the supply side. How is the inventory? Where is it coming from? And if you look at this graph, another 10-year view, you can see it's kind of the inverse of the sales, right? As sales go down, inventory rises, and our average months of supply, and months of supply, just so you know, is basically how long would it take to sell based on current absorption rate, the amount of homes that are on the market today if no new homes came on. And so we're sitting at 6 months right now, which is what the National Association of Realtors defines as a balanced market. And we haven't seen that 6-month number since May of 2020. And most of the time, looking back at the charts that I have, most normal markets here are 5, 6, 7, 8 months of supply. And so with that review of the recent headlines and the numbers of what we saw last month, I'm going to do a look ahead and I'm going to make 4 bold predictions for the fourth quarter. We can come back and watch later and judge me and see how I did. But the first prediction I have is that we are going to see an increase in inventory due to specifically a lot of new homes coming on the market. I have several homes now that have been under contract for 18 months, maybe almost 2 years in some cases from the pandemic, that are finally just now being finished, and we're seeing the builders start to catch up. So what's happening is people waited so long for these homes to be built. In many cases, the home is worth significantly more or a good amount more than what they have it under contract for. And so life changes. They're either going to put these properties on the market to make some quick money, or life has just changed and you're going to start to see new good product come to market, which is very much needed. So I think that's going to be a new wrinkle in our market in the fourth quarter. I also think that you're going to see other pent-up selling demand. If we argue, which I do, that our market peaked in February and March of 2022, a lot of people just can't jump on and say, I'm going to sell my house and move. Even if it's local, it may take months of preparation and thought, or maybe it's a larger relocation where they have to get a new job. There are people that want to sell. They still have huge equity gains from the run up in pricing over the past several years. And they've now had time to kind of digest that fact. They've gone through a little bit more of our off-season market, a summer, late fall. This is when things typically start to heat up more. So I think you're going to see a lot more units come to market of people that are accepting kind of that we're a little bit off the peak, but it's still a great time to be a seller in the Sarasota market. My third bold prediction, and this is a bit of a sad one, is that we're going to see continued market growth in our area from displaced hurricane victims. As I'm filming this today, we're only about a week and a half past the main hit of the hurricane, and you cannot get a hotel room in Sarasota. You cannot get a short-term rental. Our roads are jam-packed simply because many people to the southwest do not have basic shelter, right? So it's a big deal. When you get the seasonal push coming down that buys all along the Gulf Coast of Florida, they are not going to be able to buy, or they're going to be less apt to buy perhaps in the more affected areas. So obviously inventory is going to be tighter. We're kind of the furthest south area that really wasn't hit very hard before you get to the Everglades. So you're going to see the displacement of what's going on geographically probably be a little bit of an accelerant to our market. Especially short-term rentals and things where people are just rebuilding their lives. So that's a sad point, but the amount of population that is shifting, I mean, I'm already hearing stories of people from Collier County, their kids are enrolled in Sarasota. There's just a lot of transitioning going on. So that's going to be a big factor. And then number 4, my last bold prediction is I do predict that pricing pressure is going to continue to build on sellers. And that is because of affordability issues based on rates and just overall economic headwinds. So check out this graph. You can see that the average monthly mortgage payment compared to a year ago has risen 53.7% for the average American. That's from the National Association of Realtors. So if you're paying about $1,300 a year ago, the average payment now is $2,000, and that is a serious dent of $700 a month for the average American. And I venture a guess that because of our home prices here, it's actually a lot more here. So there's a crunch on affordability. Another thing that we're seeing, if you look at this next slide, is that there is a huge crunch on the mortgage payment to income ratio. Throughout our healthier market of the last decade, we started and leveled off at about 11% of a person's average income to 18% of their income was spent on their housing, their mortgage payment. Back in the Great Recession, which was one of the unhealthiest markets of all time, we saw that that was about 25% of the average income for the principal and interest, and today we're actually exceeding that. And so the average percentage of one's income that is spent on their mortgage payment is a whopping 25.4%. At some point, home buyers are just going to tap out and say, I can't do it. And if they all do that at the same time, that's going to put a little bit of pressure on your pricing. This brings me to my last topic on this, number 4 point, and that is that home prices are still forecast to appreciate in 2023. I do not think the market is bad. And spoiler, I do not think our market is tanking after the hurricane. I do think we saw an ultra hot market. I think we're seeing some pullback, but most major economic houses are saying that they think that we'll see between 3 and 4% year over year appreciation in 2023. So don't panic. We will get through all the changes in the world and the economy together. If you need a strong listing agent with almost 20 years of experience in the Sarasota market, we're here to talk with you and consult with you. If you have any questions about the video or disagree or agree, let us know in the comments section. And thank you so much for your time and for watching. Make it a great day.